in Nigerian Treasury bills have been slightly bullish this week as investors digest Nigeria's first quarter borrowing plans. Ifeoma Onyejekwe, a fixed income trader at UBA, joins us now to provide an update on that market. Thank you so much, Ifeoma, for your time, and Happy New Year to you. Let's talk about investor sentiment in the fixed income market this time. And
thank you, Wally, for having me.
All right, so let's hear your thoughts on that.
Okay, so like you said, we've seen slight bullish sentiments in the fixed income space, both in the treasury bills and in the bond space. And the highly anticipated Q1 bond issuance calendar was released on Monday. So we see an increase in FGM borrowing plans to 400 billion from 225 billion last month. And so investors are eagerly waiting. There will be a likely increase in stop rates. We're likely to see the stop rates cross the 16% levels. 16% levels, and although we've seen inflation slightly marginally decrease to 21.34 from 21.47, it has been stable around around the 21%. So for the MPC, we'll also see that the MPC next week we're likely to see an increase in the MPR so as to tame inflation.
Let's talk a bit about that bond borrowing plan and how the market is likely to react to it. I was speaking yesterday to an analyst, and he was of the view that the capacity of the market to absorb such huge, if you like, bond issuance is limited. Would you agree with that sentiment? Do you think that the government may struggle to fill that order?
Yes. The government will not really struggle to fill that because the market has been very liquid too. We're also expecting FAC allocation to be paid at month end, and then the CBN swaps that have matured in some financial institutions has not been rolled over yet. So we have seen the market awash with liquidity. And although yes, international investors are not as active in the market as they are used to, especially with the forthcoming presidential elections. So yes, we will see market is liquid, so we will not likely see the federal government really struggle, as we will see heightened interest in this Q1, but they might struggle as the year goes on.
All right, so let's hear your thoughts on what the MPC is likely to do next week at its meeting. We've seen how aggressive they have been with tightening in previous meetings, but now that we're seeing inflation, many are suggesting peak. Do you get a sense that they may slow down on that tightening cycle?
Well, I don't think inflation is really going to peak. We have seen the huge fuel queues everywhere, and then there's likely to be fuel removal subsidy as planned in February. So we might see inflation inch up again. So yes, there's likely to be an inching up in the MPL next week. But market is watching, and then we're interested to see what the CBN will do.
All right. Well, what about the Forex markets, and what type of stability are you anticipating in that space? Because I think speaking to a lot of investors and business people, it remains a major concern in terms of how they're planning 2023. Will there be further weakness for the currency? What's your view?
Well, that's likely to be seen. We've actually seen an increase in CBN interventions from the beginning of this year. So that may likely not happen, as the CBN will employ all means to consistently defend the currency.
Earlier I mentioned that the Minister of Finance confirmed that the government is not looking to tap the Eurobond markets. Now, in that context, there is the view that obviously they're going to now have to move more aggressively into the local market, given the huge budget deficit that is planned for 2023. In terms of the foreign exchange needs of the economy, do you think it's significant that the government find other foreign denominated cash flows that can support what the central bank would typically provide from oil sales?
Well, yes, it would be a good idea, but to be honest, it's very difficult for African countries to go in the international markets right now to raise bonds. We can see that the Fed has been consistently increasing rates, so it has become more expensive for us to borrow. And also, there was a downgrade in Nigeria's rating last year, so it's going to be even more expensive. So yes, it will be a nice idea if the federal government can find more sources of foreign denominated borrowings, but for now, they'll have to concentrate in domestic markets.